Hey, everybody, Tom Gentile. I want to welcome you to our midday report, Monday, August 24th, 2020. Glad to be here. Before we get started, I need to make sure that all of you can hear me. So if you can hear me, please let me know in the chat box. All right. Seems like every week we have to at least start out this way. Make sure we got that dialogue going. I've got quite a bit to cover here in the next half hour. So as soon as I start seeing folks give me a thumbs up or a yeah, we can hear you on the screen. All right, looks like we're good to go. Thank you very much, everybody. All right, so let's move on in. Hope you guys all had a good weekend. I certainly did. You know, I live with a bunch of vampires. So what that basically means is that my wife, my kids, they pretty much stay up all night. And that's tough for me come Monday when the markets are open. But like I said, a lot of stuff goes on over here at the House of Gentile. Guys, before I begin, if you want to check out, there's just stuff that I'd love to cover with you. Just for time constraints, I simply can't. We have a YouTube video or a YouTube channel you can check out, and that's youtube.com/Tom's Trading Room. Here's another shortcut. I'm going to throw it right into the chat box so you can check that out. Last week, we were talking about calendar spreads. So calendar spreads are time spreads. We call it the sunrise strategy. So check that out when you can. I did a video earlier in the week on trading from my van. And of course, next week, I've got, not next week, later today, I got a video coming out on, you'll see what it is here soon. I will share with you at the end of today's broadcast a clue as to what we're going to be talking about in the next video it comes out. Again, youtube.com/Tom's Trading Room. All right, so what are we going to cover today, right now, live? All right, I want to get into market news, technicals, the typical things we talk about: S&P, TLT, UUP, USO, GLD. Things are moving the expected way for us. All right, so if you were here with me, what was it, 2 weeks ago? We were discussing the Labor Day pattern and the dog days of summer. Did a video on that too. All right, but we talked about the fact that the markets typically go up because there's just a lack of news that's being shared, and that's what's happening. We'll follow up on that. I want to discuss probability and probability cones, and then at the end of the day, I'm going to talk about something called trading with Dondi. All right, it's a family challenge we did 2 weeks ago, and I'm just going to touch on that for a little bit. So we'll do that as well. So lots to cover here in the next less than 30 minutes. So let's go ahead and get started. We're going to get the probability in a moment. Let's go ahead and log in. And I'm using tomsoptiontools.com, my proprietary site. So I want to go to stock charts. And we're going to go to the list. And I want to go to the list for a reason. All right? Take a look at, this is the S&P 500. I'm going to blow this up. And I'm also going to use, let's see, let me toggle on the blue. Yeah, there we go. The blue arrow. So follow the blue arrow, if you will. We had a high earlier in the year, all-time highs on the S&P 500, just shy of 340. Coronavirus low took us all the way down into the low twos, below 220, before getting a rebound. And what we were talking about a couple weeks ago is that now that earnings and now the news was behind us, that our expectations were that the market was just going to slowly drift higher and take out those old highs, and that's exactly what ended up happening. All right? That's exactly what ended up happening. Joy, if you can't hear my message, turn up the volume, because this message has been loud and clear the last couple of weeks. And you can see we popped up again. What I suspect is going to happen is we're going to continue to see very little news come out. We're going to continue to see very little news, very little movement, and I think that these higher highs are going to become lower and lower and lower. And as that happens, I'm expecting we'll come through Labor Day and everybody's just going to have this kumbaya moment. And I think that's when the risks in the market falling become the greatest. You get into September, October. Those are the 2 months seasonally that the markets have the most amount of risk to the downside. All right, that's SPY. Let's take a look at the bond market. Now, I was talking about, at the same time, the bond market moving higher. And last week, we were discussing something we call darknet or alpha 9 channels. So I want to change this stock chart type back to darknet because I can do that. And let's just see where that darknet signal was. And that darknet signal, we actually had one. Okay, it was an intraday signal which moved on us, but it was right down in this area here in the mid 160s. And since then, darknet's been moving. The market's been moving higher off of that signal. I'm going to stay with this particular trading strategy as we move into UUP. Now, UUP is also showing that has moved lower down into 25. Last week, we discussed the fact that cash became the lowest that it's been all year long, and that we were looking for rebounds. And that rebound area, that resistance area, which was old support, was up here around 25.70, 25.75. That is an area that, if we do see this happening, could move too. I don't expect the dollar, just like I don't expect the markets to fall really hard in the next week or so. I don't expect the dollar to go up very much in a week or so too. But again, we're in the quietest time of the market seasonally each particular year. All right. So that is UUP. USO. Again, want to talk about quiet? Take a look at this. I'm actually going to jump into just what's been going on the last 30 trading days. And so let's jump to USO. You can see what USO's been doing the last 30 trading days. High 29s over here a month ago. Now we're in the mid 30s. Not a lot of movement. In fact, we're stuck in a trading range. We've been stuck in a trading range all month long with USO. The last time, in the beginning of April, we had this big stab all the way up to 31. We saw a 31 high, and we've not gone above that 31 high in literally the entire month of August. But oil has not been crushed either. Okay? So that's USO, kind of stuck in the box, stuck in the trading range. GLD, sure, this is one a lot of you want to take a look at too. So last week we saw GLD. Well, it was almost 2 weeks ago. Big pop down, right? And then we started to come out of that, and GLD went from below 180 up to, and it came right back up to this low area here, back around, I want to call it August the 8th, August 9th. We had that August 9th low just below 190. Well, we touched on that and fell down again. And now we're putting in some resistance right below 180. We're going to call that 179 or support. We have 179 support. We have 189 resistance. That's where we are right now. We'll see where gold ends up going. But it would not surprise me in the least if gold does pull back, because it had that huge run up off of 170 back a month ago. A month ago, we were at 170, ran as high as 194. Now, in this particular area, we are in a 50% to 68% retracement area. So it could hold here too, as we see where these shakeouts end up happening. All right. So there you go. Again, this is GLD. And finally, before I move any farther, let's go home. Let's go to crypto tools. And let's take a look at charts. And I want to look at, again, I'm really interested in Bitcoin. That's the chart, the foundational coin, the first. Got to look at Bitcoin. Where's Bitcoin trading at? Bitcoin has also stalled out in this area right here. As I go into, let's take a look at the last, we'll put 50 days on the screen. Right, 50 days on the screen. There's the big jump. All right. Any of you that play cryptocurrencies, any of you that follow my microcurrency trader research service, we've done extremely well with our cryptos. And we were looking at Bitcoin as it came out of that 9,500 area. What's kind of shocking me, and it shouldn't, because everything's moving sideways right now, is that even cryptocurrencies have not all of them, the big ones, All right. Not all of them, but the big ones. And we're seeing the big ones kind of consolidate as well. So I want to let you all know, all right, this is the time. All right. This is the time where we're not going to get big moves in the market. All right. We'll get them in certain stocks. We'll get them in certain, maybe an ETF or two. But again, no guarantees. But this is a period. It started last week and it's going to run through this week and even possibly into next week as we come into that Labor Day holiday. It's just a time where you don't see a lot of move. Don't expect big rewards that happen, although the market tends to move higher. And it's done pretty well the last 2 weeks. But we start to see that fizzle out as we get closer and closer to Labor Day weekend. All right. But also keep in mind, if that's the case, you can't expect, if your rewards aren't going to be as great, guess what? Your risks are also not going to be as great either because the market tightens up. Right? To me, the big moves are going to come after the Labor Day weekend. All right. So that being said, let's talk about probability and probability charts. Now, when I talk about probability, and I'm not going to spend a lot of time on this, and the reason I'm not going to spend a lot of time on this is because there's plenty of places to go. If you go to, if you guys went to my website, tomsoptiontools.com, and you go up into the help category and you do a search on the glossary, you're going to come up with an area that says odds and probability of profit help. And so what this does is this explains odds and it explains probability of profit. And we start off talking about heads or tails. And when you flip a head or a coin, heads or tails, what ends up happening? All right. What ends up happening is that over time, the more you flip a coin for heads or tails, the more we end up in an area, we call it that sweet spot, where you typically see 50%, a 50% move. Either you're going to hit heads or you're 50% chance you're going to hit tails. Now, when you come out of options and when you go outside of looking for an expected outcome flipping a coin, then those things can change. And we have equations out here that explain that. They explain risk curves and how price prediction is actually created. Now, I want to show you this. And we're going to spend 60 seconds, maybe 2 minutes on this chart right here. For those of you that don't know what, when we look at things, if you don't know statistical or standard deviation, statistical probabilities, this chart has a lot to say. All right, so let's talk about this chart. Now, what I'm seeing is I see stock price on the left and I see stock price on the right. But the left is a price of the stock, and then we have these cones. All right, we call them probability cones that project outward to give us an idea of the range of that stock, a mathematical expectation of the stock range going forward in time. Now, we're going to say that we're looking at this 60 days into the future. Now, the chart on the right is your probability chart, and it gives us a probability that the stock is going to be above or below a certain price within that 60-day projection. So if this stock XYZ is at 70, then I know 60 days from now on this curve, that this curve is right there around the 70 area, that there's roughly a 50% chance we're going to be above 70 or below 70 60 days from now, right? That's based on where the stock price is today. Now, what is the mathematical probability that we're going to be above 85? So you see, here's 85 on the chart, and we're right in this area here. This is our standard deviation. All right, this is our first standard deviation. This is our second standard deviation. Based on our second standard deviation, it tells me that if I look across and I come down, it tells me I have less than a 10% chance that this stock mathematically is going to be above 85 60 days from now. I also know that there's also a 10% chance it's going to be below 60 during that same time frame, 60 days from now. Right now, I don't want to bog you with all the details. I just want to say this. The farther a stock price is set to go, all right, outside of where it is right now, outside of its normal range, the lower the probability becomes. Now, a lot of put sellers will use this information to their advantage if they are mathematical traders. And they look for trades that have a high probability that the stock is not going to come down. That's what, if you talk to any put seller, You know, that's the two things that they'll tell you is that I have a high probability of profit. And there's also that adage with put sellers that options were meant to be sold. Okay. Now, where a put seller might run into problems is if you're coming into a situation where you have an earnings report that could cause the stock to drop significantly, that's where these will fatten out, because a lot of this helps us determine or is based on option prices. So this will squeeze together and fatten out based on, in the case of the stock chart, based on standard deviation. In the case of options, based on future predictions. So now I want to get out of the math, because I don't want to I don't want to bore you guys all to sleep. But what I want to talk about is how we can use this information as put sellers, as investors. Okay, so I have in my group of categories, I have an area where I can come across and I can do searchers, and I can search on single strategies. And one of the single strategies I like to look at a lot as more of an option investor, not an option trader. Okay, an option trader is looking inside of 30 days. An option trader looks inside of a week, and sometimes even option traders can look inside of the day and look in hours instead of days or weeks. But today I want to talk about, getting out there a couple, month, 2 months, 3 months out. And to do that, I look at selling puts. Now, I have all this search criteria in front of me, which is already kind of put together. But if I wanted to look at, for instance, wizards, and I wanted to look at a wizard that said highest probability of profit with puts, I could click on that. And that's going to change a lot of my information to set me up to find these potential probabilities. Now, when I click on this, I'm looking at a stock list. And the stock list I'm looking at is what I call the penny and weekly stock list. If I really want to open this up and look at every optionable stock under the sun, I'm going to do that right now. And I'm going to run this, and I'm actually searching this by what out there has the highest probability. Now, when you're going to search 4,000 optionable stocks, it's going to take a few seconds to go through, but not that long, because here we go. And here's what we're seeing. We're seeing stocks that TUR, BNTX, here's TUR, here's Alibaba, here's TAN, LEN. Okay, so let's take a look and see how are these ranked. If I come across here, I can see how they're ranked. They're ranked by probability of profit. So this particular stock, right, selling this particular put, gives us statistically a 92% chance probability of profit. Let's dig into this a little bit deeper so we can see what we're talking about here. Because I'm telling you right now, guys, you are looking at this live, all right? I am showing it to you live. And I didn't pre-plan this, all right? I don't pre-plan a lot of stuff. The only things I try to pre-plan for webinars and things like this is to make sure I cover what I say I'm going to cover. That's what I have for slides, all right? But if you take a look at TUR, let's pop on TUR for a moment. So I got a couple pictures to look at on TUR. TUR, Turkey Invest Market. Okay, so this is obviously the country of Turkey. This is not Thanksgiving, right? But you can see here, and there's been some, this is decent. When you see these moves here, this is decent volume, all right? This is, if I see dots on the screen, I leave as quickly as I see the chart, I get out of it. But this is decent volume right here, as I see, all right? This is an iShares, which is similar to an ETF. And what we're seeing here is the pre-coronavirus highs up in the high 20s, the pre-coronavirus lows at 18, the rebound to 23, the drop back down. And I'm sure that has a lot to do with what's going on with the options. Now, the ETF looks good. Let's take a look and see what pick 2 tells us. This is the probability cones that we discussed so much. So probability cones, and we see the first and second standard deviations going out in time. And they're telling us that the standard deviation tells us that this area here looks like it very well could hold, right? This area below 20. Great. All right. The last picture is just simply a picture of the moving averages to see where they are. And the moving average right now is showing us that we're seeing the 10-period moving average below the 30, but they're starting to consolidate again, which could give us a potential bullish opportunity. Well, selling puts is bullish. So take a look and see if we take a look at the bullish opportunity with TUR. Last thing I want to look at is, what is this put price doing? All right. So what is it telling us to sell? The 18 puts. All right. The 18 puts for $1.08. So let's just say we could get $1 for these, educationally speaking. Okay? This is not a recommendation. I'm just trying to show you some education here. But if we could get this on for $1, I'm going to go back and I'm going to click risk graph once again. I'm going to reset this to $1. So that means that I'm going to take $100 in per contract. But I am obligating myself to buy this Turkey ETF at 18. What's my risk? What's my reward? What's my break even? As an investor, you look at if you believe emerging markets are going to come back, and you believe Turkey is one of those emerging markets that's going to come back, then I look at 18 and I say, all right, this is out of the money. We're talking about something right now that's trading 10%, 15% above its high, or above the current price. That's number one. Number two is I'm getting $1 for this particular put option. So that brings my break even down to 17. They're going to pay me $1 to obligate me to buy at 18 between now and November 20th. All right. So we're looking at a trade that has a little more than 3 months. And if we come on down over here, you can see days to expiration, 88 days. So you have to, number one, and this is when I look at selling puts, I'm not a big put seller, guys. All right, I'm going to tell you right now, I don't just go out there and sell puts on anything. All right, I have to ask myself, would I buy this as a stock if it were to go to a lower price? All right, now if you see here, the resistance on this is at 19, and that was back, this was months ago. You see a resistance at 19. If we were to go back even further, like we did earlier, that resistance shows us in the 18 area. All right, if we go back and look at TUR, we look at pick number one. Remember pick number one? 18, just below 18. This thing traded at back when things were their bleakest, if you remember. It wasn't that long ago. All right, so that's the first thing I look at. The second thing is, do I like it at 18? Do I like it as a group, as part of the emerging markets group? And if I do, if I would buy the stock at 18, then potentially selling the put options gives me that added advantage. So that's how I look at this. And then finally, it's a matter of, remember, spotting the opportunity, creating the low risk trade, and then plan, execute, and manage the trade. And let me slide on in here how that's done. So that's done by typing in TUR. And then I'm going to look at put options. And I'm going to say, all right, not today's, because today's are not what I'm looking at. I'm looking at the options that happen on they expire November 20th. And right now they're, slide it out here a little bit here. They're bid 175 and offered at 2. Ooh. So this is the 20s. Go to the 18s. The 18s are 1 by 115. So you can get more than likely, if these are 5 cents between the bid, nickels in terms of bids and offers, then this could easily be done for 105. All right, again, not a recommendation, just showing you how I go and search for these longer term investment type opportunities. Okay. So there it is. And then if I look at this and I say, all right, you know what, 105, 110, 115, whatever that number is in your head that you like, that's the limit order. Okay. If it's 105, it's 105. If it's 110, it's 110. Okay. And so when I look at those, I think about those rules that we talk about here every single week. All right. Those rules that, and let me expand on those a little bit. All right, the rules are like this. Options are a small part of my overall trading and investing strategy. So I don't throw everything into one trade. All right, that's just dumb. I've done it before though. I can't tell you that I've never done that, right? Something that you might not know about me is in 1987, I went belly up in the stock market, in the market of 87. Yeah, it was actually the day after Can you believe it? The day after Black Monday, I managed to lose not only all the money I had in my account, but I actually ended up owing the broker money. I had a maintenance margin call that I could not meet, right? That alone would have wiped out most people from ever coming back into the stock market again. I decided, you know what, I'm going to figure out how to do this correctly. So I learned how to do that. And I spent years learning, getting out of trading with emotion and trading more objectively. Trading more objectively means a couple of things. Number one, finding a rules-based objective trading pattern, like what we're talking about here, scanning based on things that repeat themselves, right? Number two, and when I talk about scanning, it can be something simple too, as long as it's objective. Let me show you what I'm talking about here real quick. Let's go over here. I'll show you guys. Let's go over to crossover. So even, for instance, simple moving averages, you can create an objective trading strategy out of simple moving averages. So let's say we're looking at just 10s crossing above 30s, right? I can look at stocks, and I can go back and see, where stocks, the 10s crossed above the 30s. If you take a look at the S&P 500, or no, look at if you create a stock list, and your stock list is a certain group of stocks. Maybe it's FANG, maybe it's the big numbers, and then you run those to see how much percent profitable per stock they were. In this case, 80% of my stock list is faring correctly on these winners losers. Look what's winning: Tesla, USO, gold, Facebook. But then you get down, what didn't work? UUP, which I don't trade anyway. Look at Apple. Apple didn't have any trades, so it wasn't a winner or loser. But this is all based off of a simple moving average crossover where you see buys and sells. So once again, look at objective trading rules. All right. Number two, create low risk trades. Low risk trades are, in my case, a lot of options. I'm options oriented. And that means that I'll look at low risk or high probability trades. Sometimes that would be buying calls, right? If conditions are right, sometimes it means spread. Sometimes it means selling options, like selling puts. And I've sold calls as well. I've sold calls before, but that takes a lot bigger bankroll to do that, right? And number three is plan, execute, and manage your trades. And planning your trade means, how much do I want to risk in this trade, all right? And I let you know this: to be a true objective trader, you have to risk less, not more. The more you risk, the more you're not an objective trader, the more you're going to let subjection and you're going to let emotion take over. And guys, I am not 100% perfect, all right? There's nobody out there that is, okay? Out of all my trading strategies and trading systems this year, believe it or not, the selling put stuff has worked more than anything else when I look at win to loss. But you know what? That's going to change. I mean, things you have to constantly, what I do is I constantly look at what I'm doing right, look at what I'm doing wrong, and find out what can I do to continually improve myself as a trader, and in my case, as a researcher as well, to you. And so plan, execute, manage. All right. Those are the steps that I take when I look at trading. And yes, for whoever asked the question, did George Fontenilles help me along the way? Absolutely, he did. He was my mentor. I met him on the American Stock Exchange back in the early 90s. I remember going in for a tour, and there he was. And the story was, and I'll tell it to you real quick, his whole grid up in his area at the American Stock Exchange went dark. He lost power. The funny story is I went up and was going to meet him, a couple other folks, and he says, I can't talk right now. My power's down. I said, well, let me check a look at it. And he goes, hey, you know what? Nobody on my team can figure it out. So I look around and I look underneath, and you know what? The spider web of cords, he had one plug that was unplugged, that somehow came unplugged, barely. All I did was plug it back in. The whole thing came back up online, and the rest is history. That's how I met George. But anyway, guys, that's pretty much my whole strategy here. Again, if you take a look, and the last thing I want to talk about is trading with Dondi. So what is trading with Dondi? All right, so trading with Dondi, is he came to me and he came to me with a trading idea. And again, I don't like trading. I'm not a big fan of trading on whims or hope or fear or greed. But there's an interesting thing my brother's been doing. He's cheap. He's cheap, and he trades cheap too. But I'm going to share with you the actual the actual company that we both went in on 2 weeks ago. All right, and we'll talk. And I want to share it with you because I want to set you up for something that we're going to be talking about later today. All right, that you'll have access to if you are a subscriber to our YouTube channel, youtube.com/Tom's Trading Room. You'll be able to see this in its entirety. But let me set the stage for you. So come and you know what? Let's take a little walk here. So let's get back on the screen. You guys should be able to see me. All right. Well, maybe you don't see me. Maybe I need to come on over and say hello. So what we're going to be talking about later today is this company right here. All right. Red Robin. What does Red Robin have to do with what we're going to be talking about tonight? Well, it involves some ingredients. And I'm not talking about hamburgers and french fries. I'm talking about my brother-in-law is an ingredient. All right. And the way he trades, that's an ingredient too. But where we differ, because we both looked at this and there was something that made me decide, you know what? I'm going to go into this with you. Only he's going to do it one way. I'm going to trade my way. So we did this challenge 2 weeks ago. And the short story is it ended on Friday. The long story is it's continuing. So to find out more, then I will be sharing with all of you who are subscribers to our YouTube channel the video that I like to call Trading with Dondi, or more importantly, Trade This, Not That. All right. So and between now and then, take a look at a chart of Red Robin in the last 2 weeks, because that's going to help set the stage for what we're going to talk about. All right, so looking at this has made me hungry. I'm going to go get something to eat. You guys enjoy the rest of your day, and I look forward to seeing you again same time next week. Till then, see ya. Bye now.